So let's get into today's session. So the US dollar just kind of pulled one of those moves where it was like, hold my coffee and watch this. It jumped higher on strong data and some very hawkish Fed minutes that we got last night. And here's the big question now. Are markets pricing in rate cuts or quietly bracing for the Fed to stay stubbornly higher for longer? Because when the Fed starts flirting with the words rate hike option, the whole market suddenly sits up straight and pays attention. And today, that spring might just be tightening. So for those of you who've never attended a session with me before, good morning. My name is Francois. This is your daily market brief, and I'm the market analyst here at ATFX Africa. So today we are covering 3 instruments that are carrying the mood of the market right now. Number 1 on my list today will be USDZAR. Number 2 will be natural gas. Number 3 will be the S&P 500. And then obviously anything additional that you guys want me to have a look at. So without further ado, let's get into it. So USD/ZAR is trading around 16 Rand 8 cents to the dollar. Now, while the Rand remains close to its strongest level since June 2022, we need to understand all the various aspects currently going on in this currency pair. So on the support side for the Rand, there are things like, for instance, the gold rebound is helping sentiment towards South Africa, as this is a key precious metal export for us. Now, South Africa's inflation has also cooled to 3.5% in January from 3.6%, but came in slightly above the expected 3.4%, which reduces expectation of a near-term cut at our next policy meeting. The Reserve Bank of South Africa has kept rates at 6.75% at their January meeting, pointing to global uncertainty and risk from food and electricity prices. Yes, Eskom made an appearance with new inflation targets at around 3%. Now, on the other side of that equation is the US dollar that is firmer. I mean, the dollar index is hovering near 97.7. And this is after a strong move higher. We saw Fed minutes showed policymakers are split at the moment, and some even wanted language that explicitly left the door open to raising rates if inflation stays above target. Now, the rate cut expectations have trimmed slightly, but there is still an expectation for 225 basis point cuts before year end. Now the big question just kind of shifts to when. Okay, so there is at this point in stage 2 by year end, but it's just kind of right now as to when. So the setup kind of looks like this at the moment. We've got Rand support, or Rand supported by metals, plus a really steady South African Reserve Bank tone versus a stronger dollar driven by a hawkish Fed and strong US data. So with that being said, let's quickly have a look at the actual USD/ZAR chart for today. So as we can see, as I stated, currently trading around 16 Rand 9 cents. And we can see here on the, I'm not a 4-hour time frame here at the moment, strong downtrend. Okay, I don't think there's any denial in that. Yes, there is a slight hint at the moment here for some upward momentum, as this is the first time since last year, November, that we are actually seeing our 21 EMA about to cross that 100 EMA. Now, near-term resistance will definitely be here at around 16 Rand 30, so that will definitely be something to overcome. But as well, if we break above this 200 EMA, currently sitting here at 16 Rand 90 cents to the dollar, that is that initial push that I believe the dollar would require to start strengthening a little bit against the Rand at this point. Now, if we do break above the 1630 level, that could push the pair towards that higher resistance level at around 1660. Now, support is sitting very strong here on the psychological 16 Rand to the dollar level, where if we see a break 1564, which is the low point so far for 2026, comes back into focus. So in essence, we need to kind of answer the following question. If the Fed is signaling we might not be done, does USDZAR find the energy to bounce, or does the Rand keep squeezing it lower? And then there's also a second part to that question. Traders, what happens? Because at this point in stage, as I stated, we are being kept elevated by precious metal prices such as gold. What happens if we see some major, and I'm talking about big retracements in that gold price? And even metals like palladium and platinum and all these type of things, like what happens if those start pulling back hard? Would that kind of signal a buy the dip opportunity within USDZAR? Because we have elevated precious metal prices. Now, again, I'm not saying short gold, but gold sitting at 5,000 and it's struggling to break through, much higher than that. So is there a possibility for some larger retracements on gold? Maybe back down to 4, maybe even 3,500. And when that happens, or if that happens, what happens to the price of the Rand? Or what happens to the value of the Rand? Let me rather put it that way. So in essence, could this be a buy the dip opportunity on USDZAR? Weigh in a little bit. Let me know from your side. That being said, though, let's look at some intraday options that we have right now. So as we could see on the slightly higher time frame, momentum has started to shift. On the lower time frames, I'm here on a 15-minute. Momentum has relatively shifted, and we are currently sitting on this smaller resistance area right here. In essence, a break above, I would say, yeah, we can round it off to 16 Rand 11, maybe if you want to push it like 16 Rand 12 cents to the dollar. That could signal that initial upside potential with a potential push. Sorry about that. A potential push to go slightly higher on this currency pair. My mouse messing around with me now. Obviously, we'll have to look at some stops below these low levels here at roughly about 16 Rand. As we can see, we've been bouncing on that level quite significantly over the last couple of days. So even stating that, USDZAR has been providing some nice day trades, and this is why I'm looking at the lower time frame here at the moment as well. And I mean, if we get a nice little entry, that could push all the way back up to this 1630 level, which from where we are sitting, that kind of gives you at least a 1-to-2 risk reward ratio. But again, if we don't break higher and we break lower, and especially if we break below this shorter term supports here, that could open up the door to some maybe shorter time frame, short positions, and with the potential of around a 1-to-1 risk reward ratio, maybe just aiming here for yesterday's low points. That's also an option, just taking like a little quick day trade, intraday trade in that aspect. So definitely some options starting to present themselves here as well. Yeah, I do see we have quite a few. Oh, okay, no, we just have a morning from Robert. I also had a good morning earlier from Steven. Happy also said good morning, Happy. Okay, I would say it is a possible buy the dip scenario. I'm tending to agree on this. I really am. So it's definitely, again, we're talking here about very large trades that you'll have to have stops probably below 1560. So setup would kind of look something in this regard. But there is definitely so much upside potential. Even if we just go back to like mid 2025, which gets us back up here to like 18 Rand to the dollar. I mean, that setup there, that's like a 4-to-1 swing trade. That starts looking pretty attractive. obviously again within risk management parameters, but and there's obviously a lot of factors tying into this. But as we said, just playing out some scenarios here. If we have a Fed signaling the fact that there might even be rate hikes coming up, or maybe not so much cuts in the near future. Plus, we have the opportunity for precious metal prices to drop as well. That kind of opens up the door here for the rand to relatively weaken against the dollar, and that opens up additional opportunities. So yeah, just like I said, sharing some thoughts. But definitely some nice intraday options there as well. Okay, that being said, let's move on to our next instrument for today, which is natural gas. And I almost feel natural gas at this point is basically how low can we go? Last week, and I'll show you the charts just now as well, I made the statement, maybe just have a look at shorting natural gas on a Friday before it opens and wait until Monday to close the trade. And it played out so nicely. Did I take the trade? No, I did not. I kind of wish I did. I really do wish I did. But yeah, so let's discuss natural gas. So it is obviously sliding at the moment towards that $3 per million British thermal units, hitting its lowest level since October 17th. Now, some drivers behind this at the moment is obviously the near record production of natural gas is currently weighing on prices. So that's step number one. And output in the US is averaging about 108.5 billion cubic feet now in February, which is also up from 106.3 in January. And daily production recently peaked near 111 billion cubic feet per day. And on top of that, the weather is doing no favor for bulls when it comes to natural gas at this point. I mean, forecasts are calling for warmer than normal conditions through early March, reducing heating demand and letting utilities keep more gas in storage. Now, liquid natural gas demand is strong. Flows to major export plants climbed to around 18.6 billion cubic feet in February, above January and potentially exceeding December records. But it's not enough to overpower supply plus mild weather forecasts. So natural gas has support from liquid natural gas flows, but the market is basically saying, nice try. Okay, but supply is still the loudest voice in the room. So let's look at the charts. Let's discuss. So yeah, you can see this was during our session last week, and I said, you know what, maybe on Friday, just enter a sell. Close it on Monday, and just look what happened. Again, massive gap down, and it's just kind of been running down from there as well during the week. And now approaching the support level here at $3.10. So if prices settle below $3.10, the next support is here around $2.80. So that could be the next dip lower. And the tone is still very, very bearish, while forecasts point to weaker demand after February 25th. So we kind of need to be asking ourselves right now, when production is near record highs and the weather refuses to cooperate, how long can that $3 level keep acting as a floor? So looking at this on lower time frames, always not even worth it, because of the fact that on the lower time frames, okay, there are some nice little day trading opportunities. Yeah, I mean, here we got a nice little break of structure on Tuesday. There's some decent risk management, putting your stops just above those highs and then trading on that momentum from there on downward. So we could see something similar today. If we break this week low here at $3.30, that could be that last little push towards $3. And who knows, on Monday, we might actually open even lower, closer to $2.90, maybe even closer to that $2.80 level. So definitely some opportunities here as well. And then again, looking at larger time frames, we are once again starting to approach those lower buy the dip opportunities once again. Just remember, as per previous data as well, January is not necessarily the best time to start buying. As you can even see here, last year, Jan, there was a massive move down up until, well, yeah, around about Feb. Market started moving higher again. Sorry, this was this year. So I was so confused with what I was seeing. So here we could see February, March 2025, markets pushed down all the way till around April. And this is kind of when cooling demand kind of picked up again, like peak summer, etc., which kind of drives the price up again. And then it dips back to around August, September, October, from where we normally start seeing some bullish momentum again. As I said, that kind of means, well, firstly, these massive gaps are weird. Okay. As you can see here, that is not normal price behavior. So there's definitely a possibility that this downward momentum is not done yet, and that there is still a lot of potential for this to push further down and maybe even come all the way down to this general area here around $2.60 before we might start seeing some good upside momentum on this again. Would love to hear your thoughts on this as well. Let me just see. Wow, natural gas. Now that I look at it, what a nice play out on your previous analysis. Thank you. I appreciate that. But yeah, I mean, sometimes the most simple ideas are the one that pays off the most, eh? So, but that being said, let's finish things off today with equities and more specifically the S&P 500. Now, this index has actually provided so many trading opportunities over the last few weeks, and I'm going to show you guys that just now as well. Just primarily because the fact that at this point in stage, it's acting like a steady pulse meter. Okay, I don't know when was the last time you guys went to hospital, but literally having a look at an S&P 500 chart at the moment literally just looks like that heartbeat monitor that goes toot, 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 toot. Like that's literally all it looks like right now. And we saw US stock futures little changed after a positive session. Yesterday we had the Dow rose about 0.3%, S&P was up about 0.6%, Nasdaq was up about 0.8%. Primarily due to a tech rebound helped by Meta saying it will deploy millions of NVIDIA chips in a new data center, with NVIDIA stock increasing by 1.6% after that. We also saw energy and financials helping out a little bit as well. But the big macro anchor today is still the Fed. Those meeting minutes showed many members warning disinflation could be slow and uneven, and some policymakers supported wording that would keep the possibility of a rate hike on the table if inflation remains above target. So even though the majority of traders are still pricing in multiple cuts this year, just with slightly reduced confidence, I would say right now. And now we are seeing attention shift to upcoming data for this week. Today, we have jobless claims being released. Tomorrow, we have PCE inflation and a GDP report. And this could definitely shift sentiment. So let's have a look at what that sentiment shift could look like on a chart. First of all, just wanted to show, like, I mean, come on, heart rate monitor. Like, so perfect. So last week, Thursday, we were up here during our session. We kind of explored again from it either to go up to that resistance or break lower. And I mean, we had such a nice little break lower. If we go down to a lower time frame, we go back there. Here we go. So, I mean, we had this little block over here, and we said if we get a break lower, we can start looking for some short positions. We literally got a break lower later that afternoon, and market just kept selling, all the way till it found support here at the bottom again. And after finding support, came back, retested, bounced higher, and then gave some nice buying opportunities from there again. Now, if we are looking at the higher time frame, obviously at the moment we are trading above support, just below this resistance level here at 6,900, which I would be a little bit wary of right now. So for me, I'm kind of wanting a break above that 6,920 level. Should we be able to get a break above that? So let's go down to a lower time frame. So here you can see we are trending a little bit higher. I know there are probably some scalp intraday traders that might take an opportunity. Sorry, that trade was upside down. An opportunity like this. Okay. Sorry, guys. There we go. Like an opportunity more or less like this, maybe a 1-to-1 up to that little resistance. For me, I would kind of want to see a break above that, and that could push us a little bit higher to there. Again, giving you about a 1 to 1.5 risk to reward ratio. And then again, just see how price action reacts up there, and that could trigger another short position back to come and retest the 6,820 level down here. Now, obviously, that psychological 7,000 level is sitting right there. And if that gets broken, that opens up the door to a lot of new momentum higher. Okay. So as you can see here, we have been trading within this range for the past 4 months almost now. And at this point in stocks, we are stuck within that holding pattern. And with PCE tomorrow, which is likely to influence the next move, you know, we now need to see, are we just going to stay range bound? Is it just going to come back, retest the bottoms here again, maybe at 6,700 and just stay within that range? Or are we finally going to see a catalyst that pushes us past the 6,920 all the way to that psychological 7,000 and then just breaks through and then goes and sets some new higher highs for us here? Because as of late, we haven't really seen new highs on S&P because of the fact that we've just been slowly stuck within this range at this point in time. So traders, if you do have any questions for me, please pop it through. If not, as we are heading into the later part of the session and tomorrow, please keep your eye on the US data pipeline, especially anything that reshapes expectations around PCE inflation and the broader rate outlook. Because right now, markets are calm on the surface, but underneath, it feels like everyone is waiting for the next headline to hit us like a surprise margin call. Okay. So, okay, cool. I think with that, we wrap up today's market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Now, if you want to go and experience the difference for yourself, simply head over to atfx.com and go and have a look. Traders, until next time, stay sharp, stay focused, and trade smart.